Hi, my name is Crystal Kolnick. I work for Jarvis Properties in the South Peninsula. I've been doing this job for 18 years now, which is quite a while. A lot of my buyers are first-time buyers as I work in quite a domestic area, so my properties are lower price range. So some buyers make the mistake of going directly to the bank to get the bond and turn down the option of using a bond originator. Bond originators are known to get a large percentage of more bonds through than the client's own bank, and also they get a more competitive rate, so you cannot lose. Also, when your own bank sees that you're coming through a bond originator, they tend to be more competitive and sharpen the pencil. So go to a bond originator, do not go directly to your own bank for a bond. That's number one. The banks work on 30% of your income as a standard norm, so they'll look at your gross income and 30% of it would be the amount that you would qualify for your bond repayments. Ask for a disclosure form. Don't take the house at face value. Find out everything there is to know about the house, warts and all. If there's anything that the seller needs to disclose to you, remember to ask for a full set of council plans as well. So all the information that you require to make an informed decision as to what the value of the house is to you and how much you would like to offer. So what you need to consider before you purchase a home is your affordability that your bond consultant will help you with. But then if you are self-employed, that's a little bit trickier. So as a first-time buyer, you might completely earn enough money, but you don't realize the implications. Firstly, you need a 20% deposit, and then you need 2 years records of money that going into the company, money going out, so your accountant will have to have your books up to date. And then one of the trickier things is that your tax has to be completely up to date. So remember, they don't look at the money going into your account as a qualifying criteria for the amount you can afford. They actually look at the amount of money that's been declared to the taxman, which can sometimes be a little bit of a difference, and that largely affects your affordability. So chat to your estate agent or chat to your bond originator, and they can tell you exactly what you need as the qualifying guidelines before you purchase or before you think of purchasing. As a purchaser, you don't have the choice of the estate agent that you get to choose. You'll find a house that you like and you'll end up by default working with that estate agent. You might form a relationship with an estate agent that you meet along the way, just with shopping and finding different homes. And then you could ask them if they've got access to other properties and you could choose your agent that way. But mainly you'll find that you get your agent by default if they've got the house that you like. So for first-time buyers, remember to ask for an access bond. This means that any extra money that you've got, you can put into that bond account, and then if you need the money again, you can take it out. But while it's there, your bond repayments are actually lowered per month, and the overall installments and your interest is actually lowered with the more money that you've got in that actual account.